So today on Thursday, we had CPI inflation come out, and it was a big surprise at only 2.7% and 2.6% for the core CPI data point. So we have a bit of a labor market and inflation data surprise right after the Fed decision there just last week. So we are very excited to kind of get into things here this week. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after every interaction. And we bring you this weekly update just to kind of share some things we're watching, talk a little bit about what's going on in the markets and what's truly driving some of the trends that we're seeing. And this week, again, is following the Fed decision and press conference just last week, and was very important. I kind of teed this up last Thursday, if you caught that. But basically, we had a lot of data come out finally, and it's very interesting right off of the back of the Fed meeting because this is exactly what they're watching. So this week we had employment, we had retail sales, and we had inflation, which I'll cover all of, and then we'll wrap up a little bit about a great question of the week, which is maybe a shared question, talking a little bit about some of the year-end considerations to be aware of as we get closer here to 2026. So getting into the data side of it, first up, I want to touch on the employment report, which came out on Tuesday. The U.S. employment report shows that we added 64,000 jobs recently, which was more than the 45,000 expected, but still low, to be clear, right? This is still a low number, but it did surprise a bit on the upside. In other words, I guess a positive surprise. And then the unemployment rate came out at 4.6%, which was up from 4.4% in the last reading, right? So job side of it, kind of a mixed bag, but generally speaking, a little bit better on the jobs added side than maybe many had anticipated coming into that reading on Tuesday. We also had retail sales come out this week. This is probably the least important one given the theme right now, but retail sales did come out. They were flat for the month. Obviously, with holiday shopping, we will see where this goes here in the next month here ahead. But the other big one to really highlight was that we had inflation data come out. So today on Thursday, we had CPI inflation come out, and it was a big surprise at only 2.7% and 2.6% for the core CPI data point. Now, to be clear, there are still some data details, let's call it, to unfold, but the data point is extremely interesting and definitely surprised the markets with, significantly lower number than many had expected. Many were expecting over 3% or even higher. And so again, seeing this 2.7 and 2.6 headline and core number was certainly a bit of a surprise. And it's very interesting timing, again, off the back of the Fed meeting, where they were a little concerned of where to go with rates. This, we'll have more before the next Fed meeting, but this could shape some of the Fed decisions as we head into January. Again, there is still some details to unfold here on these data points, so take this with a bit of a grain of salt. But either way, if this trend does look to be accurate and we see this kind of continue, this absolutely could shape the Fed's decisions heading into January and into 2026. So we will continue to watch that, but very, very important given the Fed's meeting just last week. Before we get to our question of the week, be sure to tune in next week. Although it will be a shorter week, we'll come to you on Wednesday, actually, because of the holiday. We do have GDP numbers and consumer confidence. And again, this is all heading into some of these shorter trading weeks to end up 2025. But before we break this week, there is a really great question that really comes from year-end considerations and really comes from kind of a group question, so to speak, and really the way that our team reviews end-of-the-year items for clients as we wrap up stuff to finish 2025. So I'm not necessarily going to hit on all of the specific details to consider heading into year end, but what I did want to do is cover some of the bigger items that we look at for clients as kind of part of our process heading into the end of the year. And hopefully this helps you for some things to consider for yourself as well. So one of them is tax planning, probably one of the obvious ones. But the key here is looking at expectations, where you actually expect income, capital gains, you name it, to fall. And any adjustments you may want to make as a result of that implied or expected tax impact here for the year. A couple things that come off of that, as you might imagine, are kind of the standard ones, right? We want to absolutely look at Roth conversions for folks where that makes sense. We want to look at required minimum distributions, of course, make sure that those are getting carried out for anybody who requires distributions on their own IRAs, or maybe has inherited an IRA themselves. One other thing to look at is tax loss harvesting. So if you have an investment account outside of the retirement system, let's say you've got $1 million, $2 million, something like that in an investment account, absolutely looking at tax losses is really important here as well. You may have some gains through the year, you may not, but either way, if you look now, and this should be an annual, throughout the year thing, but it's a great time to make sure to look at the very least right now. If you have any positions at a loss, you may be able to sell those to recognize a tax loss, even though your account may be up for the year. Another big one is charitable and personal giving, especially with some of the tax cuts, the Big Beautiful Bill Act changes. This is important to make sure to address just with some of those adjustments and make sure that you're taking advantage of, the tax code there, if giving is something that is important to you, and making sure that you're not crossing thresholds or leaving something on the table. A big one for this year is also next year's 401k contributions. Obviously, they have increased some of those. If you have any questions on that, let us know. We can get you a tax table that we've created. But also, there's some conversation around where contributions need to be dictated and stuff like that. So just making sure you have a good grasp on what that looks like heading into next year. If you had any after-tax contributions in your 401k this year, maybe considering converting those to Roth if that makes sense. Just kind of cleaning up the 401k IRA contributions to wrap up 2025, as well as head into 2026. And the last one, which is really important, is kind of an inventory review. This is a great time to clean up everything, make sure all the details are covered. For us, what this means is that heading into next year, we start working on a plan update, a refresh with that new inventory update. But regardless, this is a great time just to make sure everything's accounted for and we've got a good grasp on kind of the personal inventory side of it. All right. Hopefully that's helpful. Obviously, a lot of this does revolve around taxes, but much bigger than that is also just making sure to clean things up so that you can hit the year strong in 2026. Hopefully this is helpful. Certainly look forward to catching up next week. Again, we will come to you Wednesday instead of Thursday, but we'll be covering the GDP number and consumer confidence all ahead of that shorter week in trading. In the meantime, have a great weekend, and we'll see you next Wednesday.